Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, I have to say it's not an obvious place to be, the markets at least at the moment. There's a lot of things going on out there, and it does seem quite uncertain. I know there's never anything particularly certain about being in the market, but it just feels more so now than it has been in the last couple of weeks, or last couple of months rather.
Yes, that's very true, and this week is especially true for that. We've got a number of things that are coming up this week which could create all sorts of excitement in the markets. We've got a public holiday tomorrow, being Tuesday, and we're obviously recording this on a Monday now, and that sort of throws a spanner in the works for us. But then internationally, we've got the Federal Open Market Committee meeting, which is on Tuesday and Wednesday night, and we'll get an announcement from Janet Yellen on Wednesday evening regarding some sort of indication as to when the Fed might start to raise interest rates, and the market's really going to be watching that very, very closely. This will be one of the most closely watched Fed meetings of all of them. And then we've also got the Greek situation, which, you know, the Greek government seems to continue to evade their creditors, and I think the relationship there is becoming more and more tenuous. And I don't know whether they're going to get through this week without, with a solution. It's certainly looking a bit doubtful at the moment. So that's going to create some excitement in the market as well. Then locally, we've got the futures closeout on Thursday, and we always know that there's plenty of derivatives activity leading to the futures closeout. And then the last thing is that there's a big top 40 reweighting on Friday. So all sorts of things in our market which could create excitement this week.
Garth, in fact, we looked quite a lot, in a fair amount of detail at futures closeout last week, looking at the optionality that is, I suppose, built into the market at the moment. Possibly before we explore the top 40 in futures closeout, we talk quite blithely about futures closeouts. For those who don't know what it is, perhaps you can just simplify it.
Yeah, well, the futures closeout happens every quarter. So the third Thursday of March, June, September, and December is typically when you have your futures closeouts. And futures are, by definition, it's a contract to exchange, to buy or sell an asset at a future date at an agreed price, effectively. And that future date is always your futures closeout date. So we have futures contracts on all instruments on the derivatives division of the JSE. Your top 40 being the most common, but you've got single stock futures on all the individual stocks. And then, of course, you've also got the corresponding options on all of those instruments as well. And all of that stuff effectively closes out, or the contracts become deliverable on the futures closeout date. And it's a very big day in the market. Typically, you get very large volume of trade that goes through because there are lots of derivative positions that need to be unwound or rolled forward or exercised, etc. So you'll always find that your futures closeout days on that third Thursday of every third month of the year are very big volume days in the market.
Well, I know that you've got a graph of the top 40 up at the moment, so let's chart-wise, let's have a look at that.
Yeah, so this is the chart of the top 40. We have looked at this last week, but we just revisited it again because it's still very much relevant for this week. And what I specifically want to focus on is the fact that the futures closeout is this Thursday, that's the 18th of June, and you can see that demarcated by that orange dotted line on the chart there. And what I specifically want to look at here are the option strikes, but the put options strikes specifically. And the reason why I'm interested in that is because there's not really very much call option interest in our market around current levels or lower. Put options, however, are fairly active at the lower levels. And you can see it indicated there on the graph from 46,000 down, 45,000, 44,000, and 43,500. There are a lot of put options in terms of open interest at the different strike levels as you go down. And you can see the quantities of each contract indicated there. Now, keep in mind that every 1,000 put options contracts effectively represents 450 million rand worth of notional exposure, roughly. So you can do the maths, and you can see that there are some very heavy strikes there, starting at 46,000 and then particularly at around about 45,000 and 45,100. Now, why this is important to look at now is because obviously our market has been fairly weak recently, and it remains relatively nervous. In the event that we get further weakness in our market because of any of these other international events that we've discussed, keep in mind that what would typically happen is that the writers of these put options, who are usually banks in this case, would be almost obliged to sell short the market in order to hedge their put options exposures. Because if they've written a put option to somebody else, they've effectively given somebody else the right to sell at the strike price. But in order for those banks then to hedge themselves, they need to actually short futures into that market so that when it comes time for them to exercise, they've already got a short position on the other side of it. I mean, I know that sounds complex, but in a summary, what it means is that if the market is weak going into Thursday's closeout, there's a chance that we could see the selling pressure exacerbated to a certain extent by the derivatives activity as the market trades down through these strike levels. And certainly that's what we saw at the December futures closeout in 2014, and we saw it in quite a significant way. So we've got to just keep that in the back of our mind. I'm not saying it will or won't happen, I don't know, but it's certainly worth keeping this in the back of our minds right now.
Okay, because, and as we said last week, you have quite a lot of interest in this futures closeout because quite a few positions hang on it. So just, I suppose you wrote to me rather wryly that people thankfully no longer have to hear about all the put option structures after this week because this is the closeout for those structures too.
Yes, well I know that this is quite a complicated structure, and I know a lot of people email me and say, we don't understand this thing. Anyway, look, this will all close out this week, Thursday. We'll know what our fate is with this structure, and then from next week we might show it one more time just to show how it all ended, and then the viewers won't have to see it again until I decide to do another option structure
which
for
may
the
be
following
quite soon.
quarter. Well, we might do something for the September closeout. But as it stands, that green area is effectively our profitable area on the top 40 structures. We've got 2 separate top 40 structures open, and then we've gone long of a few top 40 CFDs against that structure as well. So quite complex, but it gives us a broad array of a profitable area. And you can see the profit payoff over there, and that's in a linear fashion how it would look on the futures closeout this week, Thursday. So as it stands right now, the top 40 is trading at around about 46,000 now, which implies that we're currently running a mark-to-market profit of just over 14,000 Rand on these option structures. If the market were to fall lower, then we would make even more money. If it was to go a little bit higher, well, we might make a little bit less money. But the nice thing is that we're pretty much going to make money somewhere, irrespective of where the market closes out this Thursday, provided it doesn't fall down into that danger zone below 42,000.
Or suddenly shoots up to 49,000, because then in fact, that would be really annoying, I suppose, to see it do that.
It would be annoying, but even if that happens, we'll still make a bit of money, but we'll make certainly a lot less than what we've currently got as a mark-to-market profit at the moment.
Garth, I know you also want to look at some of the individual indices on the JSE and how they will stack up against each other heading into this week's futures closeout. Yes,
well, I specifically want to look at the domestic indices of the market, because obviously, we've had our markets had a bit of a wobble recently, and this can sometimes lead people to think, oh, is this the end of the bull market, or is it all going to fall in a heap now? And I just want to put a little bit of a different spin on it, I suppose, and look at the long-term charts of each of those major indices. So we're going to look at the Indi, the Fini, and the Findi indices on our market to see how they stack up on a long-term basis, and then also zoom in on the shorter-term trading action of each of those indices.
In other words, SA Inc., because you're excluding the resources from.
That's right. We're excluding the resources shares. We're excluding the gold shares. It's really the domestic sectors of the market.
Okay. Well, you've got the Indi 25 there, so that is the strongest index,
it is, yeah. Look, these indices have all been strong, but the Indi 25 has been particularly strong in this bull market. And you can see now this graph goes all the way back to 2009, back to the beginning of this bull market that started in March of 2009. And what's quite evident there, you can see the well-defined upward trend that has been in place over the last 6 years or so. And that trend actually remains intact. As things stand, you can see we haven't broken below that long-term uptrend. So whilst that is intact, we need to still respect the fact that that uptrend is, in fact, still there. And until we start breaking below that level, we can't get too concerned about the long-term sustainability of this bull trend. I'm not saying we won't break below. I really don't know. But for the time being, the trend is your friend, and you've got to respect that. Now, I want to zoom in on that boxed area over there. That now is basically the trade that we've seen during 2015, effectively. And you can see it there highlighted now on the next slide. You can see that long-term trend that comes in, which is from the previous graph that goes all the way back to 2009, and you can see the market got down close to that area recently, but didn't quite test the long-term uptrend support. Now, what we need to keep an eye on here is the possibility that we might be seeing a head and shoulders pattern form. You can see it quite clearly identified there, the left shoulder, the head, and then we may be in the process of forming a right shoulder at the moment. I'm not sure, but certainly watching the bounce of the last couple of days, it's been a very weak bounce. Some people call it a dead cat bounce. And we have seen selling pressure coming into our market in that late afternoon session. So it still, for me, is a bit concerning, and I think there's a possibility that we might be making the right shoulder of a head and shoulders here. And what's important is that we don't go below the neckline of that head and shoulders pattern, because if we do, it would not only validate the head and shoulders structure, which is effectively a bearish pattern, but it also could potentially then mean it would break the long-term uptrend as well.
What about the Fini 15?
The Fini 15 looks quite similar.
Yeah.
So again, we've got the chart going all the way back to 2009, and you can see that uptrend, how beautifully it joins all the lows that have come into play throughout all the corrections in the last 6 years. And the market remains well above that long-term uptrend as things stand. So again, if we highlight the most recent area of trading activity and zoom in on that, you can see again this is effectively the trade that we've seen during 2015 to date. What's interesting here is that we do have a validated head and shoulders pattern. Okay. So you can see it quite clearly identified there, the head and the two shoulders. We've broken down below the neckline of that pattern, and that projects down to a target of about 15,900 on the Fini 15 index, which we haven't been as low as that yet. But now what's also quite interesting for me is that this little rally that we've seen now during June looks to me like it could potentially be mapping out a bear flag pattern within that downtrend leg that we've currently seen since late May, really. And if that bear flag were to be validated by a break to the downside, then that effectively brings a new downside target into play, which would be at about 15,350. And that, coincidentally or conveniently, is where the long-term uptrend comes into play. So right now, I guess I'm saying caution is still very much the watchword. But if we start getting down towards that long-term uptrend, then it might present us with a few nice buying opportunities in the financial space.
Okay. And if you have to take them together, which a lot of people often do, taking the Fini and the Indi, so in the Findi.
Yeah, so the Findi 30 is effectively the 30 largest domestic stocks in South Africa, the biggest financial and industrial conglomerates. And again, the chart looks pretty similar, as you would expect it to. It joins all the lows since the 2009 low and the bull market that has been in place for the last 6 years. And you can see that very clearly evident there. And again, if we zoom in now on the trading action that has taken place during 2015 to date, well, it looks very similar to the industrial index. We've got a potential head and shoulders in the process of forming over here again. And we need to monitor the neckline of that head and shoulders pattern. If the Findi 30 were to break below about 69,500, that could validate this head and shoulders pattern. But then we do have the long-term upward trend that comes in just below that, which might provide a little bit of support. So I guess what I'm saying in summary is that the long-term bull market for all of these indices remains intact for the time being. But nevertheless, we still need to be fairly cautious in the short term.
Sure. Garth, so taking all of that into account, let's end off with having a look at the portfolio as it stands. I imagine there's not too much difference from last week, maybe slightly down.
Very little difference from last week. Effectively, we've only got that options position open at the moment, which we're running out into close out this week, Thursday. We're sitting with just shy of 329,000 Rand in capital, so it's still up 31.5% for the year to date. So, considering that we're halfway through the year, I still think that's a very strong performance. But as things stand, with the uncertainty that we've discussed, I'm not rushing out to do anything silly in the market. I'm not forcing any trades at the moment. Yeah,
I mean, we can maybe chat about that next week in trader psychology, and because the last two trades, Mediclinic and Capitec, got stopped out of both. But we're going to run out of time tonight, so maybe let's pick up on that theme next week. Yeah. And Garth, just to end off, you do have courses in July, so just remind us what those dates are.
Yes, so in Johannesburg, I'm doing an Understanding CFDs course on the 16th of July, and then a high probability trading course on the 18th of July. So anybody that would like to attend either of these courses, please email me, garth@traderscorner.co.za, and I'll send you all the information.
Okay, great. We'll leave it there. Garth, thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.
Traders Corner was proudly brought to you by IG. Visit igmarkets.co.za to open a trading account today.